Hi, this is a quick video to show how Hedgebook treats vanilla FX options with particular context to the exposure tool. For the purposes of setting up this demo, then I've used a sterling US importer, so I've used $1 million US dollars a month in terms of payables, and I've entered a vanilla FX option. So I've done the option for half of 1 month's exposure. I've done it at a strike of 138 with an expiry at the end of June. So if we hop into the exposure tool, then we can see how that gets represented. So the green bars is the $1 million US dollars a month, and here we can see the $500,000 option. It's this speckled sort of color because at prevailing market rates of 1.4083, then that's above the strike of 138. Therefore, you're not going to exercise that option. If you're going to do the cover, then you would do it at the more advantageous higher rate. So Hedgebook's saying, okay, this is 500,000 of cover here, but at market rates. And in fact, market rates, spot rate, achievable rate, they're all the same line because the hedge rate's the same as market, and the achievable rate, which is the combination of the hedging in place and the unhedged at prevailing market rates, all ends up at the same answer. But if we take that slider to below the strike of the option, then we see a different outcome. We're seeing the hedged rate at 138, so exercising the option at the more advantageous higher exchange rate. In the scenario, spot rates at closer to 134. And that achievable rate is in the middle because it's 50% hedged at the hedged rate and 50% of the unhedged cash flow at the prevailing spot rate or market rate. So that's what's giving the 136.04 outcome. And yeah, that gets represented in the chart below. So you can see this is our option at the strike. So the table of numbers just representing what's going on in the chart above. Alternative way of including an option is if we look at trade ideas, then we could add a vanilla option. Let me just pin this controls at the top. So let's do it for 250,000. That's the prevailing market rate, but let's make that 139. Then you can see, let me change the date so it's just a little bit more obvious. Let me make that July. Then you can see it coming in here. Again, at 134, you would be exercising at the strike of 139, but if the market was somewhat higher, then you'd be doing it at market rates. Trade ideas doesn't save into the portfolio. If you need to enter the Hedgebook, enter the deal into Hedgebook, as we did with the first one, for it to be a permanent deal. You can include or exclude trade ideas in here. But yeah, that's how an option works in Hedgebook. We've got a bunch of different instruments, and I can go through any one of those in a similar way if it's helpful. Just let us know. Okay, thanks.